Good evening. This is Ken Long from Tortoise Capital with a review of the weekend trading report for November 13th, 2016. The market is in bullish normal conditions. On an annual basis, using weekly RSI 14, we're at the higher end of neutral at 58 out of 100. Using the 10-day NDX short term, the market is overbought at 81 out of 100. In the market mosaic, we are white bullish at 4.27% price relative to the 200. The 5-day slope of the 50-day moving average has improved to yellow neutral, almost flat. ADX has strengthened to 27.4, a strong positive trend. The risk index is the 30-period moving average of the VIX divided by the 10-period. 1.0 is the threshold between risk on and risk off. The current reading is 0.883, so we are in risk off mode. That suggests we take measured short-term trades by priority and be reluctant to establish new long-term major positions in new sectors. We take that score of 0.883 compared to the last 5,000 trading days, compute the average and standard deviation. That gives us the risk Z, which is a minus 1.41. You can see a 90-day histogram of that indicator here. We just bottomed out at a negative 2Z just prior to the election. The results are being interpreted favorably in volatility as we are in the spring of this indicator as it starts rising. That has been a time in which longer-term swing positions have started to work on the upside, and so we'll be looking for opportunities to see who the new leaders are. It's suggested to me that based on blended monthly rebalancing, that it's the U.S. indexes had the most favorable response to the elections, whereas the previous leaders like Latin America, Brazil, have suffered. And so we'll be playing the game that way. Current holdings in the blended monthly rebalancing, well positioned in small caps, tech, and emerging markets. The current leaders based on the closing prices on Friday, you can see here. In ETF2, the theoretical exposure is at 40%. The model portfolio is also at 40%. That model portfolio took profits in Brazil and some international ETFs that had grown overheated, so locked in a nice gain for the year on those sectors. These are the blended monthly rebalancing portfolios for these different ETF universes, and you can see that we got a mixed bag now between buying and cashing, but all the U.S. sectors have rolled to the top. Financials and small caps and energy especially looking good. I like the signal that the Dow 30 industrials are favorable because those are 30 large real things, and that's a vote of confidence for the U.S. And ETF Max, these are the top 50 or so from the ETF 1000 database, and you can see there were quite a few that had enormous responses to the election news. Some took major hits like coffee and carbon, more coffee. The soft total returns also influenced by coffee, of course. And then you see double-digit gains in the last week. I would be looking for more momentum in these. Copper miners, financials, energy, Russia. As the market repositions, those are excellent short-term stocking opportunities. In the S&P 500, some major gains here in Nvidia, Morgan Stanley, Key Corp, Zion Bank Corp. Really, all the financial sector looking really good here, and even some retailers like Urban Outfitters and United Rentals. So there's a repositioning going on in the market in response to the Trump victory, and so we'll be on the lookout for new and emerging leaders. Those are the two weekly reports that I use to help me sort that out. Now, What I wanted to show here was the magnitude of volatility before the election and after. And so before the election, near the end of September, big sharp sell-off followed by a nice rebound of this size. And then just before the election, we had another sell-off of exactly the same magnitude. So we were forecasting a potential rebound on unexpected news, the size of this rebound. And we, if you measure from the bottom of the election day, that's how big that move is. But if you take it from the bottom of the channel, it was an even larger response. You can see the 10-day regression line, very favorable. The 30 is still sloping down, but that's likely to change as we start processing some of this powerful data here. Support held at 209. We're testing this upward resistance level, the all-time high around 219 or 220. So we'll see how much juice is left in the orange. In ETF2, 4 out of 6 of the indexes are on buy signals. 6 are on cash, so we're at 40-60 in terms of the theoretical allocation model. The S&P at 47 is better than EFA, the globals, at 42, so it's U.S. And inside the U.S., it's small caps, mid caps, tech, and then large caps. A change in posture to the speculative side of the U.S. spectrum. There are the two strongest sectors, small caps and U.S. mid caps. Two weakest emerging markets and Europe. Financials really led the way, and you can see how much healthier the S&P 500 just got with respect to the rest of the world. Quite a change. Weakness across the board in Europe and Asia, except for Hong Kong and Taiwan. Great strength in the U.S. small caps. That makes IWM very attractive. ETF top 30s, regional banks, financials, semis, biotech looking good. And then the white and yellows are all ones that are early in their rebound and recovery on their way up. So things like the industrial spider, oil services, small U.S. small caps. Inside the Dow 30, strength in J.P. Morgan and Caterpillar and Merck. And then emerging strength, green and white, in Boeing, American Express, and Cisco. The financials are the ones I'd be concentrating on here. Weakness still, AT&T, Verizon, Nike, Coke, and McDonald's. Shifting to the daily report. A handful of channeling and overreactions still available, and the auto framer still has plenty in the globals to set up reasonable targets. In the Dow 30 Tactical, Verizon, Procter & Gamble, Coke, Johnson & Johnson, all at better than 2-1 on the auto framer. A channeling here in Procter & Gamble. You can see the strength down here in J.P. Morgan. It was a doji on Friday, or on Thursday, excuse me. Yeah, Friday. And then it's been outperforming. So J.P. Morgan, as a momentum play, certainly deserves attention, as does Goldman Sachs. You can play XLF for the ETF for financial sector, or FAS, the triple leveraged one. ETF 30 has more choices here, as a lot of the globals are better than 2-1 now. You see Brazil, which had been dominating, just got taken to the cleaners, as did oil and silver. But now you see the strength in XIV, the inverse volatility, and then U.S. small caps and mid caps. And that's really my focus going forward, that and the financial sector. Just playing sectors right now, not so much individual companies. Auto framer has a lot to choose from. And in the regression line fractal framework, the top shelf in the green are the deep value plays, the ones that are the most numbers of ATRs below their long-term fair value. In the red, you see a new regime of who the leaders are. These are the ones that are overheated, perhaps, or the runaway momentum leaders, to look at it another way. So J.P. Morgan is more than 7 ATRs beyond its RL270, as is J.P. Morgan. The daily squeeze charts, so with structured trades based on one-day pops. And you see the significant rebound here in the surprise results of the election. We've crossed the 10-period regression line or the 30-period regression line slope has crossed its 10-day moving average at a significant distance from the long-term average, and so that is, we take that as a turning point for potential swings. You see the nice rebound off the bottom. Closest neighbor was that to here. There was a second leg, so this week will tell whether or not we've got another 4 to 5% available, and if that happens, we're well beyond the current resistance level and into new all-time new highs. So that'll be an interesting play. Yeah, I'm just flashing through a couple charts of interest here. In the Z-scores for swing trading, see Dow, U.S. mid-caps, small caps, real estate, financials, healthcare, Cliff, all these things in the green. That's really where the strength was coming hard. And then the give back in Latin American emerging markets was substantial. Nice rebound in the 10-period regression line to 30, bottomed out at the bottom of the channel, and the 90 has slowed its descent somewhat. So that says there's room for this to grow. The fact that the 90 is below average and is starting to make the turn says this could be the start of something nice. And again, I'm looking for a second leg of about another 5 to 10 points in the S&P as follow-through potential for this week. That's everything I want to cover. I want to pause now and get set up for there's some debriefings from the election trading coaching session that we did last week, and just want to hit some highlights of that. So let me get that set up. All right, I'll be going over a lot of these case studies with the coaching clients and for the folks in the chat room, but just in between these daily reports, Friday, Thursday, Wednesday, all of these intermediate patterns here, you see OWL 206-11111 XIV, that's a case study in XIV. So all of these were active trades, and you can see here on the day of the election, extensive work being done, some terrific trading going on. So I'll be debriefing that with the folks in the chat room. More numerous than I can do on this video, but just some amazing trading going on in there. And yeah, here's one from me. This was Mexico. This was the morning of. There was a big gap down, and the open was here. It broke through the hybrid frog noise barrier here. Was short, and then with a quick cover. Then a 1, 2, 3 entry when the RL10 had turned, and got to the far side of the dragon. We're long, and then cashing an orderly move in here, and we're using the width of the hybrid frog box for our multiples and position sizing. So this was a 1R win. This is 1 to almost 2.5 R in fairly quick fashion in the first 30 minutes, as Mexico was one of our big movers. Here's one in XIV that was a little bit later in the day. An orderly owl and an RLXT entry, a second position once the owl had confirmed, and then when it reached the previous swing low down here by the VWAP and started to hesitate, an orderly cash. This is one from Sonal. I love this stop and reverse. She played an owl entry here, cashed it at the RLXD, stop and reverse for a net win. Well done. Here's one somebody else took in the chat room, also on EWW, got more out of it than I did. Got it on the turn in the RLXD. Well done, cashing. Here's one in EWZ. Essentially the same pattern. Had been a big sell-off, found support, higher low, RLXD, and took the quick hit. This is in VXX, the volatility play. We get a P1 outside the river after the unambiguous move, finds support, enters here on the RLXD, gets to no lose within 4 minutes, then makes a nice cash for 3R in 20 minutes. Here's another play on a lazy W. This is a low, a higher low, pattern 4. That's even late getting in. However, I don't begrudge that. That's a reasonable entry. And then a very nice cash into hesitation as it's slowing down near the VWAP. Perfectly played. This is a nice scratch on dead money. On EWW. This was where we'd made money earlier in EWW. It wasn't following through, and so when it's not performing, our job is to get out of it and find the things that are working. Beautiful from Sonal on an owl move. You get the unambiguous move. All the 6 conditions are in place. She gets the RLXD entry, and what a beautiful cover here for two-thirds of an R. Yolanda with a nice short and cover, stop and reverse. First sell, second sell. Very nice, almost a full R. And here's final one will show us Sonal on DLK. All the elements of the owl in an orderly fashion. You almost got a low and a higher low, but beautiful owl entry and cashing at this support level that had been support and was now resistance. Well done. So there's a lot more that we can cover, but essentially the prep work that we did, planning, preparing prior, allowed us to identify some sectors and targets that were going to be quick movers and big movers, unambiguous movers, and our job is to find those during the day and get on them while they're working, and then to exit at hesitation when it gets too hard. So we don't believe in the trades, we're just making the trades, and we'll be going over the debriefing files a little bit later tonight with the coaching clients and the folks in the chat room. Just wanted to give you a sense that on an extraordinary day that caught the entire world by surprise, all we did was trade the way we always trade. We reduced our span of control, in fact, to reduce our risk, and then traded our same setups, the same targets, prepared in the usual way. And those habits of mind, those habits of practice, prepared us to do well on a day of extraordinary volatility when the rest of the world was trying to make sense of it. We were just trading the way we trade. Very proud of the folks in the room, very proud of the effort they're putting into this. We'd invite you to join us if you find this approach to be of interest. I have decided to extend the special all the way through till Thanksgiving on popular demand. So if interested, there's still time to take advantage of our holiday pricing. So take good care, and we'll see you in the chat room.